I am so sorry, members. I've had a scattered brain, and unfortunately, what transpired earlier was that I didn't fulfill the strategy completely. So, how it normally works is that we work from the higher time frame and then work down to the lower time frame. So basically, what I did was kind of speak to a lot of material working on the current time frame, but I didn't actually work with the higher time frame first because that's where dominant trend direction is derived from. So let's set that up now, and what I should have done earlier to avoid this rubbish. So what we're looking for here is a confirmed turning point. So that's what I was speaking about in the earlier forecast, is that before we set a turnaround point to identify a new direction or a new transition, we need to confirm the turning point first. And I suppose the point I want to make is that the oscillator is such a misconceiving indicator. There's a lot of guys, like I did earlier, find it quite easy just to look at and make a kind of judgment call off of. But for example, what happened today is that it could look like it's trying to kink over. It doesn't switch and just continues going up unapologetically. There's no sorry, there's none of that. It just does what it does. And what it actually is a lagged indicator. It's showing you what's already happened. It's taking the moving average of price, which is derived over a period of either 12 or 21 price points lagging up to that point and then moving forward. So it's not a forecasting tool. However, guys like myself who a little bit tired and not following the strategy verbatim, starting with the high time frame and moving to the lower time frames of that with their setups, can look at it and there'll not be a switch or something to that effect, and we can make assumptions that is because we think it's going to be what happens next. That's what we assume is going to happen next, and then it doesn't. So just a warning on a live real world condition warning of the oscillator. I got called out earlier, and learn from this mistake. Don't go through the mistakes yourself if you don't need to. Starting from the top here, trend direction. Another thing I want to say is that I actually don't have the higher time frame off of this. So the 512 is the highest time frame relevant that's provided within the TradingView setup. So if you expand the 512 to the 2048, it's going to give us an error. Okay, so it says not applicable. So for some reason, we can't go to the higher time frame from here on TradingView, which is very annoying. And therefore, we're not getting the direction, the trend directional heads up from the high time frame for this chart, and therefore it's a bit more riskier that way because it's less guided. Whereas from this chart downwards, it's guided from the higher frames all the way down. All right, so what's happening up top will obviously be a fractal of that notion on the lower frames because it's evidently the same thing, but just in different intervals and time frames. All right, so let's babbling on. Let's get some action done here. So trend direction, as I mentioned to, we are flying a little bit blind for that for what I just made mention to. So we're going to try our best with what we have here. The turning point spacing, one is forming quite late in on this cycle. So I'm not too convinced that it's finished just yet. So I'm not going to say that's something we should be interested in. what I'm doing with the mouse is switching off these probabilities. Okay, so trend direction, as I mentioned to, we can't see what's happening on the 2048. Trading view won't allow us to, so we switch that off. Turning point spacing, even though we've checked it, even though we've considered it, I wouldn't say I'm confident as to where turning point 1 is forming, because it's now a little bit late in the cycle, which is acting out of character. So that takes this, obviously, the probability for us to open up a trade based on the analysis down a few points. Scaling is quite interesting because we haven't had this bull run get to where we're at. So I'm going to put there as 8 and 9. That's the recent lows and highs of the previous cycle. And then going from here, square that up. Okay. And the irritating thing is, like, 9 times out of 10, if there are mistakes to be made, it's done by the human and not the strategy. I mean, just by doing it this way, I can see quite clearly that it should have continued going up. But I hadn't had this set up because I was so fixated on my son's birthday and other stuff. And it's always obvious once you actually just put the work in. And what I mean by put the work in is just follow the damn rules or follow the damn process. The answer is always there. And the point that I like to make on that is, if the answer is always there, going back and back testing, if the answer is always there, then we simply just need to find out what the answer is in the now moment before it's happening, and then execute on that, make some money. All right. So I'm just going to line up arc 2 with scaling threshold 1. Them tops guys don't know what I'm talking about. Just give it some extra length. See, again, like, once said differently, it's like when you take an exam and you look at the answers that the kind of exam notes, if you're studying for the exam, has it, like, the question becomes so obvious. All right, so once we've actually put the work in, the setup becomes so obvious. And the reason why the work isn't always done is because, like I made mention to, we're humans, and that's kind of not a positive thing in the world of trading, because especially guys, we don't like to follow instructions. We don't like to always listen to the rules, to our own detriment in this instance. My wife hates it. Whenever we get like a tool or something like that for home to be built, for a princess castle or whatever it is for my son, I never look at the instructions. And I just wish I would do that a bit more in the world of trading, because it's always obvious. It's just, you just need to put in effort. All right, so the kill zone is quite interesting here. It actually makes a lot better sense in this configuration. There was this initial spurt. The initial impulse is what it's called in the technical world. And then it slowed down, and then it got resisted here at this arc 1, and then started doing the ghost line thing on the way up. So you guys are familiar with the ghost line by now. If you've been watching my content, it's the threshold between 50% between there and there. So if I put that down, you'll see that that's where it was climbing up from. There was the wicks along it, and then bang, a shot off from there as well. So the answer is just always there. Put in the work, the answer is always there. And you don't embarrass yourself in public like I did earlier. Which I'm sorry about. I should have done things properly. What's next on the list? Time projection. Wow. All right, so our options are either here, which is unrealistic because price is just about to form there in any case, or here. I don't see it forming much further than that. So of those two options, what I'd like to do is then narrow that down. And this is where you get multiple time confirmations. And you've got two factors to consider, time and price. Both of them need multiple confirmations or backups because just one hunch is not enough. It's always better to have confluence, to have solid forecast, focus, and probabilities without the general lazy behavior that humans like to follow. All right, key roots. Let's go to 19. So options are 42 here. Let's see where that takes us. I can't see the writing for some reason. All right, so 42 bars is stopping us here. Let's continue. It's not a strong confirmation. It's not a strong backup for the time protection. Closing that off. The oscillator is still opening up. Price projection. Are we going to crack past 100,000 or are we going to stop just short of? I think at this rate, it looks like we're certainly getting to 94,000. I'm just curious to see whether or not it can break this threshold over here. Yeah, that's about the 94,000 threshold. So let's see what happens at when it gets there. Fan line, it's kind of in this ghost area, and then R curve, we're wanting to see if it gets over there. So that's fine. So when it comes to the reward level, if we're looking to open up a trade and the price is already here, the reward level from where the price is to the R curve or the target line is not a good risk reward ratio. It's, I think, 4:1, which is really bad. So we've considered all of the charting elements. And I can tell you right now, the algorithm is not going to give us the go ahead to open up a trade because the criteria is not met for a healthy condition for a trade to be opened in. So again, guys, let me just say, please accept my humble apologies for not following the process earlier. It's important that you follow the process per chart every step of the way without skipping steps. And then the rest of it is pretty much given to you, including whether or not you should open up a trade. In this instance, we wouldn't have taken on the loss of going short against a bull run, which in itself is kind of stupid, but you know what goes up must come down at some point. So therefore, this isn't accurate. Or if it is, then what actually happened was that it got to this turning around point, moving to the upside. Now, because this time frame over here is not recommending that we open up a trade, I'm not going to really put in the effort to do the analysis on this just yet. I want to get clarity up there because like if you want to listen to the smart guy, the algorithm, the emotionless process, then it says don't trade. So if it says don't trade, there's no real point to put in any additional effort into this. Therefore, because we're not opening up a trade, I'll wait for this to stabilize. And once we start getting anchor points and things start to iron itself out and to balance nicely, then I will do the process on this chart, giving us a full comprehensive idea of where Bitcoin wants to go to next. So on that note, what I have realized is that I've been talking a big game about the AI that I've been working on. And I think from tomorrow, no promises, but it feels like it's the right time with all these market conditions to start putting out some predictions that the AI has generated. What is today? The 13th. So maybe from now until the end of the month, I'll show you guys what it's like to have a tool like I've got. And I think the caveat I wanted to say to that is TradingView doesn't really allow me to post on the 2-minute chart. They say that it's too frequent for the traders to act upon. So these longer term charts, if you're in the office or in traffic or whatever, and you get the notification, you can at least do something with this information. But with the 2-minute chart, because it updates so frequently, a lot of the, I think, TradingView community guys have said that they get left behind. So I don't quite know what to do with that. I'm going to try to figure it out tomorrow. But if worst case scenario, I don't come right on TradingView because TradingView has cut the streaming thing, so it's just video updates, then I might consider doing something with YouTube Live, depending. I'll see how that goes. But yeah, more on that tomorrow. So yeah, let's see what the AI is capable of on the lower time frames, and get to work on these crazy markets. Still 2 weeks left to dominate this this TradingView Leap competition as well. So maybe tomorrow is a good time to start with that too. I think that's as much as I could offer for today, guys. I'll catch you in the next one. Ciao for now.